Good morning, good afternoon, good evening, depending where you are on the planet, and welcome to the Bull versus Bear webinar with Steve Miley on the call for trade day on Tuesday, the 15th of February. So welcome, everyone. We're going to go through our usual run through in here today. We're going to park the calendar first of all, because the calendar, although we have had a big focus on inflation data of late, is really not the most significant thing going on in markets right now. So I will return to the calendar. But what's driving markets right now is the apparent easing of tensions that we've seen on the Ukraine-Russia border, due to the fact that the Russians have said that they are going to start to demilitarize, and troops are pulling back, and there seems to be some evidence of this. However, it's not. So, report of troops pullbacks fuels optimism for de-escalation, and so that's been the driving force. That's kind of been breaking news from this morning, so Russia announced the start of the pullback, said that their drills were over, and it seemed that there is some pullback going on, and the German Chancellor Scholz is meeting Vladimir Putin today. The markets have certainly reacted with a big sigh of relief that the tension that was building up, rumors that something was going to happen in the next 24 hours on Wednesday, that has been eased for now, and so leading with that futures jump on signs of equity futures, stock index futures jumping higher on easing of Russia-Ukraine tensions in here. The defense ministry said that some units in military districts adjacent to Ukraine were returning to their bases of completing drills. So all of this is, seen as a respite. It's not a massively positive. We don't know, whether this is a game being played, obviously, but the markets have got themselves very panicked. We saw the big sell-off on Friday because of concerns, that from Biden saying that, a conflict or an escalation was imminent, and that was stoked fears over the weekend as well. And we saw a big dip lower yesterday, and then some signs of stability then yesterday, and a rebound part of the way through yesterday, and then a better rebound in here this morning. So that's been the big driver in here. If we go and take a look at what's gone on, if we go and look at the European indices here now, you can see European indices up about between 3% and 1.5%, up to 2% in some places. And if we take a look at US futures in here this morning, so that's obviously what we were down yesterday. Markets actually had significant sell-offs yesterday, and it had already rebounded before this breaking news. So we did see turnaround rebounds in here yesterday, after markets having gapped lower on Monday, on the cash markets gapping lower, and then closing those gap, rebounding through the session. If we look at now the actual futures markets, the Dow is up over 1%, the S&P is up 1.5%, and the Nasdaq up just over 2%. So strong recoveries. We'll take a look at the charts shortly, driving markets higher. And then on the flip side of that, you've got oil selling off. Obviously, not all of the drive it higher in oil that we've seen in here throughout January through February has been due to all the tensions on the Russia-Ukraine border. But certainly the latest up leg has been partly due to that. So we've seen oil drop lower in here, down about between 2 and 3% in here, $2 to $3 lower. And so oil futures selling off in here, and also gold as well. And we'll take a look at the gold chart. So both gold and oil lower. So gold is shot up as a safe haven, and gold moving back lower in here. If we take a look, though, just a word of caution on all of this. So NATO's secretary has said more recently, NATO Secretary General says, haven't seen signs of de-escalation on the ground. So, in a bulleted points in here, there are grounds for cautious optimism, signs from Moscow that diplomacy should continue, but we have not seen any signs of de-escalation on the ground, not seeing any reduced military presence by Russia on Ukrainian borders. Everything is still in place for a new attack on Ukraine. So a bit of a pushback on Russian claims in here, but nevertheless, stocks are holding on to their gains, and oil prices and gold are still low and sitting down near their more recent lows. So markets still continuing to react as if, some of the bigger concerns, the bigger worries of an imminent escalation or a conflict has been diminished for now, has been eased. So a positive, not just on the market side, but I think a positive for all of us, right? So a quick dip into 5 things to know your day. Obviously, they're leading with that. Russia announced unfortunately will start returning to their bases. And then also talking about the meeting in Moscow between the German Chancellor and President Putin of Russia. Putin always insisted he has no plans to invade. US intelligence indicates an attack may be imminent. I saw a headline as well this morning saying that an attack was coming at 1 a.m. I'm not sure what time zone that was, but 1 a.m. this morning. This morning coming as in Wednesday. I'm not sure what time zone that was, but 1 a.m. Going into in the nighttime on Wednesday. So conflicting reports in here, and so basically, but stocks, liking it, and here look, commodities reversing, covering there. We're seeing WTI oil lower by 3%, and also other agriculture products such as wheat, which has surged in the standoff, also retreated. So we're seeing commodities across the board. Iron ore dropped 13% in Singapore, and signs authorities in China will tend to efforts to quell its recent rally. So we're seeing commodities across the board lower. We spoke about oil, we spoke about gold there as well, and then some stuff here on COVID, not really impacting markets in here. What we're seeing on COVID there, and then it's talking about what the markets are mixed, and then PPI data. So if there is a focus for the day, obviously we're keeping our eyes on the news wires for any developments, maybe something coming out of the meeting between the German Chancellor and Putin. But we're keeping our eyes open for that, but also then concentrating here on the data out of Europe in here this morning. We have had some significant data out of the UK. We've had the employment report, and the employment report you can see in here, most of it's green, some in black, which means in line. Green, better than expectations, and normally you would say that's positive for the economy, right? However, what it's telling us, strong economy, average earnings are up, inflationary, strong economy, strong employment, employment gains better than expected. Okay, actually lost some jobs, but better than expected, not as many jobs lost as expected. So all of that is positive for the economy, positive for the labor market, and if the labor market is strong, that's going to put upward pressures on wages, and potentially upward pressures on prices, which is then obviously negative for stocks. So we're in a situation now where positive data is sometimes and often now seen as not positive for stocks, because we're at the part of the cycle we're in. We're at the part of the cycle where the market is the economies are very strong. There's risk of overheating. There's risk of the labor market being at capacity. So strong data is not seen as strong positive for stocks. So we had that this morning. We also had German ZEW survey. So opposite data in here, in that slightly weaker than anticipated. Okay, so if anything, that would be slightly positive stocks. It's not really super negative. We only had slight misses. And here you see the economic sentiment expected at 55 came in at 54.3. That's an important piece of data. So that should be positive for stocks. But all of this clearly being, you can't tell how much of this, the moves that we're seeing, is because of these pieces of data for either the FTSE in the UK, that's the UK index, or the DAX, which is the German index, because it's completely clouded by the fact that stocks are surging higher globally because of the whole situation on the easing of tensions with respect to Russia, Ukraine. We also had Eurozone Gdp, which you can see here, all in black, came in bang in line with expectations. What we're looking for today, well, PPI is going to be the focus now. PPI is very, very, very secondary to CPI. CPI, consumer price inflation, is what the consumer pays. PPI, producer price inflation. So we're often called factory gate inflation. Okay, so this is kind of the inputs that go into making goods and services. Okay, so but they obviously follow through, and they flow through into CPI. And because CPI and inflation is such a focus right here, right now, and it's elevated PPI as more important. CPI is the main data we're watching for all the major global economies. Okay, it's what we're watching. We're looking for inflationary pressures and how central banks are going to react to those inflationary pressures. So PPI is clearly going to be, although it's less important than CPI, it's going to be more elevated now because we've got such a strong focus on inflation, and it's another measure of inflation. So we're certainly watching the month-on-month data, consensus 0.5. in here, going into the core PPI 0.5 as well. So for both the headline and core number in here, looking at 0.5%. So we'll certainly be watching that. We've got those coming up in just under 50 minutes time. Okay, so that is going to be at 8:30 Eastern, 7:30 Central, and then that's at 1:30 UK time, 2:30 European time. So we're watching out for those. If you're trading oil, don't forget it's the API weekly crude oil stock in here that gets released at 4:30 this afternoon. And that is these are actually, have I got these set to, no, these are local times, current times, 7:24 GMT plus 5. No, so these are that's let me just double check that API. Just wanted to get I got the times are correct in there. Yeah, 4:30. That's 4:30 Eastern time. Okay, so 3:30 Central, and so that's way into the evening. That's 9:30 p.m. London. Okay, so we've got that data out. So watching out for that maybe later today. We do very late on as well in the US session get post the actual session after the markets are closed in here, but we're getting inflation data out of China. Probably not a massively impacting into the markets we're looking at, but maybe want to keep an eye on that as well. But more importantly, probably if you're trading oil, certainly the oil data and the PPI data we have now in just under 50 minutes. Right, let's take a look at some charts. So a really strong rally. There's a rally, but look, this is really interesting. So look, without the data, right? So we had the scare. So Thursday's sell-off was because of CPI, the higher than expected CPI. Bonds spiked up to higher yields, lower prices, higher yields. Inflationary concerns and more hawkish Fed concerns sending stocks lower on Thursday. Then Friday we had the rumors or the concerns coming out of the US administration. An attack was imminent. It was going into the weekend, so head for the heels. Big sell-off here on Friday regarding Russia, Ukraine. Breaking down through this low in here. We spoke about all of this yesterday. Double top pattern through that low there. Very negative close. And then, although the futures in here not showing the gap, the cash market is gapping lower in here on Monday. Okay, so very negative there as well. But then we had sell-off and a strong turnaround rebound. So these turnaround rebound that we saw in here, creating, so even ahead of the positive or the easing of tensions that we've seen in here so far this morning, overnight / this morning, we already saw the market trying to say, well, enough is enough. A lot of the bad news have been built in here. The market tried to rebound yesterday, and you had this positive candlestick at the end of the day, a hammer candlestick. So the market was already setting itself up that it priced in enough of the negativity. Yeah. Clearly, if the tension had increased, then we would have seen the market lower. But the market had already got to the point where we've got a lot of negativity built into the market in here, into the stock indices, and it had started to turn around. So you saw this intraday rebound. It was choppy session. We'll go and look at the intraday chart shortly. And then since then, I'll say, boom, impulsive rebound. Let's step in and take a look at the 30-minute chart in here now. So there's so here's the big impulsive sell-off. There's Thursday. Thursday's on the data. Okay, so there's the data there. Boom. We get the sell-off on the data. The market rebounded, then sold off into the close Thursday. Then Friday, with the concerns about the Ukraine situation in here and coming from the US administration, plunge lower, and there we get the double top pattern, right? And we remember that we had this big area here with this inflection area of previous highs from January and previous lows in here. So this big inflection area. I'm going to just step it back one in here to a 1 hour chart, just so we see it a bit clearer. So you got that inflection area down there. And then, let me make this a bit bigger here as well. And then you get the sell-off on Friday. And then yesterday you get the sell-off in here when the news, so we had some further negative news yesterday. That was very early on. So we saw that it's very early on London time. Okay, UK, European time is 8 o'clock. So it's middle of the night, US in here. We had heightened concerns as well. Heightened concerns and driven, European stock indices reacting to those concerns that an attack was still going to be imminent. So we had further negative news come. And then you can see the market really choppy, down and rebounded into before the US Open, then lower after the US Open as well, and then rebounded again into the close. So a decent close in here. So that creates that hammer pattern in here. Dip, rebound, and it actually created a double bottom down there. You get a double bottom formed, a little mini double bottom with the dual push lower. We got the push lower in the European session, and then we got the push lower in the US session, and then the market recovers, okay, going into the close. So that creates the hammer pattern and also a potential double bottom. And then the market's like quiet overnight, and then boom, we get the news break this morning. Tensions eased, okay, de-escalation of troops. The market not only breaks above these peaks in here that creates the double bottom, it also reverses this down trend line that comes down from last week, and then the break there then sets up a more positive tone. And then even though then we've had those kind of, well, you know, so that's the initial knee-jerk reaction, people scrambling out of positions, but then you get the market look grinding high. Remember, this is a 1 hour chart. So this happened now, what, 1, 2, 3, 4, like 5 hours ago. It was 8 a.m. London time, right? So that's, 4 to 5 hours ago we had that breaking news. And since then the market's continued to creep higher. Even though we've had no real more positive news, we've had no real more, if anything, we've had like, calling into question whether, this is legitimate. So the market's clearly believing this. So the kind of flow of news, the further investigation seems that, there is a real positive. And if you look and we extend that, remember our big zone in here. So we're back not only but through the lower end of that zone, but almost to the upper end of that zone. And it's kind of this zone's a bit haphazardly drawn, but we've got lows in here, lows in here, lows in here. You can see this low here and this low here, and you got this low here. We're above all of these lows in here. Or 1, 2. So you've got like 1, 2, 3, 4 important lows in here, and the market's back above all those lows. And it's now back also above the highs, all the highs here, that create this kind of zone. So I'm going to widen that zone out a little bit in here as well. So so now we're back at the upper end of that zone. If we now look as well, I'm going to just step in a little bit back into a 30-minute chart. Now, I'm not going to do all the same analysis on the Nasdaq, but we'll take a look at that chart. It's it's the same chart, very similar anyway. But then if we go and take a look at right now Fibonacci retracement from the very low from yesterday unto the highs of last week. And you can see in here, we're bang at the 50%. It's got half of the losses back. So half the losses back from yesterday's rebound and then the impulsive move we've seen so far today. And you can see, look, there's the impulsive moves as the news broke. And then the market continued higher, it chopped sideways. This is like really solid consolidation. Often when you get these big impulsive moves, the market then pulls back and then goes again, right? But we had the big impulsive move. The market just sat there, sideways, and then went again. Yeah, so it's really positive. This price action is very positive. It shows belief in the move. And you can see in here, not only at the top of that zone, but also there's the 50% retracement. And we basically went bang right up to 50% retracement that stops. Through the 50% retracement would be my next, trigger to go higher. So above like 44.70 would be bullish there. And then you'd certainly be aiming then at the 61.8 up towards like 44.96, 97. And then maybe even all the way back up here through 4,500 up to this peak at 45.20. We could get all the way back up there today. If we get any kind of confirmation, any kind of statement out of Putin that's slightly positive, slightly conciliatory, anything talking about a diplomatic route, anything coming out of the meeting between Putin and the Chancellor Scholz, okay? Anything like that, anything positive coming out of NATO, anything positive coming out of the UN, right? Any further soundings out from Russia, any soundings out of Ukraine, anything like that could see this market most of this negativity. Remember, all the negativity, there's CPI there, right? Back up to here is where the market kind of was pre Friday's announcement of an imminent invasion, right? So if we can get back up, and remember some of the negativity, if I step back to the daily chart, some of the negativity through here, okay, this sell-off in here now, a lot of the negativity in here that we saw through January was because of the more hawkish tone from the Fed. But we were getting the escalation also through January, yeah? We also got the escalation of troops. So part of that, if we get anything close to some kind of, sign of a diplomatic solution, I did see a headline today. I haven't been able to refine the headline for today, but for the webinar, but I saw a headline today saying the Ukraine, part of the problem, part of the issue, and part of what Putin wants is for Ukraine not to aspire to NATO. So I saw a headline saying that, that Ukraine are willing to suspend that, they're suspending their application to NATO. If we get anything kind of conciliatory, any kind of progress, this market could leap. I know we're already up, I just went through the numbers, right? We go back to where we are on the stocks right here, right now. Oh, sorry, that's Europe. So we're already up in here, Dow's up at 1%, S&P 500, 1.5%, and Nasdaq, let's just refresh those, but, is up over 2% in here. despite that, the 2.17 now on the Nasdaq. This could be a 3 to 4.5% day for the Nasdaq. This could be a 2.5 to 3% day for the S&P 500, right? So don't think that it's moved too much. We could get one a day more like this day here or this day here. We could see this candle. I'm not saying it's going to double in size, but it could easily be 50% again or further. But equally, any kind of, clearly if something breaks out, if, a skirmish breaks out, this thing's going to absolutely dump, right? So again, as I stressed yesterday, right, guys, keep your powder dry, right? This is where we don't want to be losing money. This is where we're careful. Reduce the trading size, trading those micros, trading small size on the micros, yeah, and building maybe into positions. You got to have a stop. Maybe you got to be a little bit more generous with your stop because the market's whipsawing. But then equally, if it's going to go the other way, it's going to carry on and go, right? So not too generous with your stop as well. And you can probably be more elevated, have slightly longer targets because the chances are you're going to get a much bigger move. Either had a big move already this morning, it could be just as big later today. Right, Nasdaq. It's the same kind of thing in here. Look, so in here, not quite the same candlestick yesterday, but this is called a long-legged doji. Again, it's a reversal candlestick, reversing the prior two down days through Thursday, Friday. Look at how much we've got back in here. And if I step in, I'm not going to go through all the same details as we've gone into, but you can see in here, the same trend line has been reversed. There's that zone. I'm going to widen that same zone out. Let's get rid of that trend line. Oh, no, I've got rid of the wrong trend line. Let me widen out this zone. So there's that zone. Oh, I didn't widen it out, I just pulled it across. Okay, there's the zone. So we're through the top end of that zone. I'm going to make this again, step back into the 1 hour chart so we can see that zone. So you can see the zone in there. There's all the lows in here from that zone. And then the highs on that zone. So now, you've also got this zone up here as well. Look, these famous peaks, and then a peak here for the Nasdaq. So let's take a look at the trend lines on the Nasdaq. And you got the one off the top, which I'm pretty sure we're already, well, I can tell you we are already through. I know we're already through this one. Just extend that out. Okay, and then what's going to be really significant in here is you got this one coming back in here. So this is from the very beginning of February. You got this really shallow trend line. That's really a long way away. But if you can get back above that, that's going to be super important. Yeah. And also, do you remember this basing pattern in here? The inverse sort of inverse head and shoulders. See the neckline to that? That could be an upside target as well. I know it's an old pattern, but sometimes these old patterns helps as targets. So we've got kind of two Fibonacci retracements. We're going to get rid of this one in here. Two that we could look at. One off the very top and then one. So what is useful when you got like kind of two moves in here, one and then two. You got this move here. You put the bottom in January, rebounded, and then the second move we're seeing down in February. You've got kind of two Fibonacci retracements we could look at in here. Just trying to get rid of that. Okay. We could look at the one from the very top. So the one from the very top. And what we're going to look at here, actually, let me just do that around the other way. So what's useful here, guys, is to do, when you get the option to do kind of two Fibonacci's, right, is to do them and see we have what I call a cluster of Fibonacci. So or clustered with previous highs and lows, previous swing points, right? So you can see in here we're already through the 382. We're not quite at the 50%. So that 50% is going to be our next kind of important level. I'm going to actually get rid of this rectangle. It's kind of getting in my way of it, and I'm going to get rid of that old line there as well. Okay. So you got that Fibonacci, you got a 50% there, 61.8%. I'm looking for where like level. So this, these old lows in here, you can see spiking below the old level in here. Actually, that's the 38.2% we've gone through. Looking now up at the 50. Now let's just do it for the move here. This move down from here. Okay. So what we're going to do is put the fib on for just this move down. So this is the move from earlier in February. Actually, didn't do it around the other way. Let's get rid of that. So from here, So it's from the same low, but from this high this time. And what I'm looking for is where they kind of cluster. So the 38.2s are not really clustered together. But you can see in here the 38.2 and the 50 were kind of clustered together. But we're through the 50 of just this down leg. So we're actually on this down leg, we're through the 50. And then, but look here, the 50 and the 61.8. So the 50% of the whole down move and the 61.8% of the February down move. Yeah, they're not far apart. So that's going to be a really good target. If we can get above there, then it opens up to the bigger 61.8, okay, up here. And you can see that's where these old failure peaks are. So I think, key area for the upside in here is going to be around, like, so we've got 14,640 to 14,670. That's going to be a really important area. If we can get up through there, then it really opens risk up to like 14,800 and maybe even higher today. So real upside risk in here still, and I said, even though we've had a really strong impulsive move, don't be surprised to see markets build on that going into today, maybe through the PPI, maybe through the cash market open. I'm going to just briefly give a quick nod to the other markets in here. So let's take a look at oil and gold, because I know those are the ones that some of you guys are trading. So let's take a look at oil. So that certainly looks like a bit of a failure. We've taken out the low already from yesterday. If we step into the 30-minute chart, so on the 30-minute chart, you can imagine the trend line through here. We reverse that trend line, okay? Looks like a double top pattern, top here, through the low there. Again, market trying to rebound. We've had a more impulsive move lower in here about an hour ago. Okay, so there's the initial move lower on the breaking news. We've had another impulsive move. The market's trying to retrace that, but it's still inside. Look, boom, boom, still inside the impulsive candle from about an hour ago. So looking for it to roll back down from above that impulsive high there. That's like 92.63. On oil, and looking for another down leg. Now, oil super extended on the upside. I go back to the daily chart in here. It's been in a really long up. It's really long continuous uptrend in here. So real risk for oil here to have a more significant correction lower, and this could be the trigger for it. Yeah, and you can see you got divergence as well. So in here, the market made a new high. And then when it went back up to make the new high here, we didn't make as high a high. So that's what we call a bearish divergence. Makes a high here. You see there's the high at that point there. Okay, then it drips, this drops, market drops, RSI drops as expected. Then it makes a new high in price. We break above the high here, makes a new multi-year high, and we don't make a new high in the RSI. So this is a bearish divergence. So that's a negative signal as well. And that's been now reinforced now by the sell-off we're seeing today. So I think there's real risk that we get a much deeper sell-off in here in oil. So real threat down into the low 89s, maybe high 88s in here. Maybe down to these lows here. So again, don't be afraid that this could go still lower in here on the oil side. And gold, again, look, made a new high this morning. Look, fouled right at the high up there. So there's the high back from November. The high there was 1882.5. The high here is 1881.6. Bang, fell right at that high this morning and then plunged lower. Already an outside day, bearish outside, bearish engulfing candlestick, super negative in here. And look, you know what gold can do? It can add these massive moves like this, right? Don't be surprised to see a deeper drop in gold in here, maybe down towards like 1825.20 kind of area. It could easily have another big down leg in here today. And again, it's all going to be dependent on any further kind of breaking news. And I think, really we're watching now how the cash market opens in the equities. So if equities like it and decide they're going to go a lot higher, because obviously the cash market is going to gap up. The cash market might think, well, get out. You could be some longs in here. That's an opportunity to get out. You can see a lot of selling pressure. However, I feel, you've already seen in the equity market a lot of liquidation. You've got, the market has already got rid of a lot of its longs in here, and we could have longs reinstating positions. Maybe the good news is not good enough yet. And in here, you're going to have a lot of gold longs in here from back here from the end of January right the way through February. And equally on oil, you've got loads of oil longs in here right the way, not just from here, from the back end of last year, from December, but that oil rally has come a long, long, long way, right? So we've got this much, much bigger oil rally that goes all the way back into August of last year. So super overextended in here on oil. We've already looked at the short-term chart. If I flick this actually to a weekly, it's going to be interesting. If I can just change this to a weekly. I'm not sure it's going to be. I'm not quite sure how to do that, guys. But we'll come back on that one. But I wouldn't be surprised Why can't we just choose weekly? It's quite annoying. I'm not sure how you do it in here. We'll come back on that one. Don't think I can change the minutes. Yeah. But yeah, I think this is really overbought on a weekly chart. So yeah, a time for maybe a longer term, deeper correction for oil. So maybe for all you oil bulls out there, start to think about maybe abandoning those long term bullish views on oil. The target was, a lot of people were set, just a psychological target at 100. Well, we got up to 96, right? It's pretty close, or just short of 96. Okay. I'm going to wrap it up there, everyone. I'm going to wish you all a great trading day. Stay safe out there. Be careful trading smaller size. Remember, the markets are super volatile in here at the moment. Watching out for any kind of breaking news. Keep the squawk on. You got access to the squawk. Remember to go back to the trading room page. You got access to the squawk. Listening out on the squawk. Watching out for any breaking news. I'll be back with you as ever. Actually, I won't be back with you tomorrow. Do you have James tomorrow? It's my birthday tomorrow. So James is going to be covering for me tomorrow. I'll be back with you on Thursday. Until then, take care, stay safe, have a great trading day.